On today's episode, I want to take a quick look at 3 stocks that I believe investors should be keeping their eyes on right now. So the first one we're going to take a quick look at is Upwork. This one's down about 2.5% at the end of the day. And today has been a pretty red day, especially for us growth market investors. The second company we are going to take a look at is Corsair. This is down about 3% for the day. And the final company we're going to take a quick look at is SOFI. This is down 4.3%. So like always on today's episode, we're just going to take a quick look at what's happening, quick look at fundamentals, and I'm just going to share my overall thoughts. So the first company we are going to take a look at is Upwork. For those not familiar, Upwork is a freelancing platform. I've used it. I personally have used their platform for a lot of freelancing work, and I really do enjoy it. Right now, from its 52-week high, the stock is down about 20.7%. So it's definitely seen quite a correction, and it has a market cap of about $6.07 billion. There's no real recent news about Upwork. Right now, it's just been very volatile, and that's, I believe, one of the main reasons stock price is down a lot. But on July 1st of 2021, some firms upgraded their price targets to $76 from $65. Remember, the stock right now is sitting about $47. So there are some firms out there bullish in the company. Another thing, recently they kind of had their investors presentations. I believe it was June 15th, if I may be correct, and they kind of gave the investors great insight of how they are expected to go. Some of their long-term targets, for example, their EBITDA margins, they want it to be somewhere between 30 to 35%. I think that's pretty impressive, and especially since right now they're still sitting in the low to mid single digits. So definitely pretty cool for investors. Another thing that I thought was pretty impressive is by the year 2025, that's still a long time from now, so I always take this type of estimations to a grain of salt, but they are expected to have total revenue of over $1 billion. Remember, the market cap is about $6 billion, so it does look pretty cheap compared to future growth. Again, investors, that's a long time from now, but still it kind of gives us like a form of target where we're going. Finally, the last thing I want to talk about Upwork is they kind of introduced something new on May 18th of 2021. They introduced Talent Scout, which is a recruiting solution that connects companies with pre-vetted expert talents selected from the Upwork platform. And this is just a way for them to grab more of those enterprises to come and use their platforms. And I think this is a great move for the company. If we take a quick look at fundamentals, Upwork right now is positive in cash flow from operations. Me personally, that's my favorite type of metric to look at. I don't mind if they're negative in earnings. They're also expected to grow their revenues 22.1% on average for the next 3 to 5 years. If we take a look at their balance sheet, plenty of cash to very low debt, so I am liking it. The second company we are going to take a look at, but before we go there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So the second company is Corsair Gaming. You might know Corsair from their headphones, their mouse, the keyboards, and other products that they have in the computer world. They have a lot of hardware and computer peripherals. Right now, the company is sitting at $29.33. And from its all-time highs, the stock is down about 41.81%. So Corsair, recently, they own a company within it called Elgato. Elgato focuses a lot on streaming content or streaming hardware that people like me, content creators, use almost on a daily basis. I believe this market is going to continue to grow because there's still a lot of content creation websites and platforms that are still paying content creators to come and build more content on their platform. For example, Facebook, I think, was one that just recently mentioned that they're paying about $1 billion to content creators that come and hit certain milestones in their platform. In the past few weeks, Corsair has also kind of delivered new products for their peripherals. So you can see Corsair is constantly trying to build new forms of revenue or constantly developing new products. The one that's most recent is this camera, which they released on July 15th. So yesterday, again, I believe even though people are going back to work, this type of market that, for example, this Elgato face cam is not meant for your working from home people. This is meant for the people trying to stream, for the people trying to create content online. If we take a quick look at Corsair's fundamentals, they are expected to grow 10% on average for the next 3 to 5 years. So a decent growth. They are positive in earnings and they're positive in cash flow from operations. One thing I do want to say to be careful, or one of a yellow flag for it, is one company, Eagle Tree Capital. It's a private equity venture capital firm. They own about 58% of this company. So when they sell off, and they sell very frequently, the stock price does take a nice dip. But as long-term investors, I don't think that should be an issue. If we take a look, the company is also very strong in balance sheets. They have plenty of cash and inventory, right? This is a hardware company, so you have to really take a look at that inventory compared to debt. The final company we're going to take a quick look at today is SoFi. So SoFi right now is sitting at $15.30. A lot of people get very excited when they see the stock run up, but then they kind of forget about it when the stock takes a nice dip from its 52-week high. And I believe this is pre-SPAC merger. The stock is down 40.65%. So it's definitely seen quite a correction. For those not familiar with SoFi, right, they have a lot of financial products, personal loans, home loans, credit cards, private student loans, auto refinancing, and so much more. In their most recent presentations, which they gave May of 2021 for their Q1 summary, they're still seeing strong member growth, over 110% compared to the same time last year. They're also seeing growth in total products, financial service products as well, and a very strong balance sheet. This is a company that's also expected to have positive adjusted EBITDA margins for this year, which is great news. It's showing good positive note on the company. Now let's take a quick look at technicals. We can see Upwork definitely not overextended from its moving average right now. Corsair not overextended. I want to say there's still all these stocks, even though they're not overextended, volatility can continue and the stock price can continue to drop as well. If we take a look at SoFi, not overextended at all. So I do believe a good portion of the risk has been eliminated, but my investing style is a bit different, where I do more dollar cost averaging every single week. I put money to work. So sometimes I might buy high, sometimes I might buy low. The only stock in my portfolio right now out of these three is Upwork, but I am keeping an eye on Corsair and I am keeping an eye on SoFi at the moment. Now, if we take a quick look at valuation metrics, SoFi is still a very brand new company, so not much information there. But if we take a look at Upwork, price to sales ratio right now is pretty high compared to where it's been in the past. Again, this is not a negative thing. It's just something investors should keep in the back of the mind. Like, hey, yep, there might be a little more risk. So if I open up a position, maybe I should open with the smaller position right now. Corsair, on the other hand, this price to sales ratio is the cheapest it's been since the data we have. So again, now some investors, if I'm really bullish in the company, maybe might be some time for me to really add on to the shares. So like always, guys, I hope you enjoyed today's episode. Take care, have a good night, and see you next time.